Hello, 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 ladies and gentlemen. So let's see. Okay. This is on, this is on, this is on. Okay, good. We're ready to rock and roll. Welcome, ladies and gentlemen, to our Thursdays, the Land Pilot VIP call. And I have a special guest today, somebody that I really know really well, like and trust him a lot. We do business together. He has a really unconventional business model. When I heard that the first time, I thought that's like really, he's a genius, right? He runs the Millionaire Mastermind investment group, and he's in the vacant lot space. And I want to introduce him to you because he's just an awesome human being. You will learn a lot. Get some pencils ready. And I say, welcome, Mr. Michael Poggi. How are you today, my friend?
Hello, my buddy. Good to see you and good to see everyone else on the call today.
Guys, and if you want and if you're here, just switch your cameras on, right? We don't bite, I promise. Even if Michael has some exotic monkeys running around at his house, this is what I know. I'm going to probably talk about that today a little bit too. But switch your cameras on. Let's get ready to rock and roll. Michael, for everyone who doesn't know you, who is Michael Poggi?
Yep. So Michael Poggi, first and foremost, is an amazing husband and also an amazing father. I've got a wife and two young children, which are my pride and joy. And I hope I can share a picture of that a little later. But anyway, I've got a 4-year-old and a 6-year-old, and I live near Fort Lauderdale, Florida. And I grew up south of Chicago. And so I moved to Florida 28 years ago. And my background was that I was a young man working at a stock brokerage firm downtown Chicago. So I got a lot of experience with investing in stocks and mutual funds and things like that and IRAs. So I became an expert at investing in equities and an expert at investing in mutual funds and using IRAs. And then I got to learn from my clients about what they invest in. And my clients had 95% of their money in real estate and only 5% of their money in stocks. So when I learned about that, after owning my own brokerage firm for a period of time, being a Series 7 and 24, I sold my brokerage firm, semi-retired, moved to Florida, spent almost all my money in Florida, and learned that you got to start saving your money when you retire, not spending it all. So I went ahead and went into real estate and started building houses and buying vacant lots and flipping houses, and got a huge amount of experience in many of the different sectors, including Airbnb and on and on and on. But I think really the most important thing that I learned was low aggravation, meaning low involvement, more passive, and lower risk and better income. And that's why I've stuck with vacant land for the last 28 years of my investment career.
That's amazing. I know that you went through a lot of ups and downs, and one of the things is what I think when you manage so well is you take your past experiences, especially from the brokerage side, and converted that into a land investing model that's really cool. Tell us a little bit, like for everyone that's interested. I know you have a complete zoo at home. You didn't tell us about that, right? Tell us a
I
little bit what
do.
you
I
do on the
do.
side before we go in the land side, right?
Yep. So my wife and I have a private rescue facility in Florida. We have enough land to handle a couple hundred animals here. So we end up having Fish and Wildlife and USDA bring us animals that people were not supposed to have, or maybe someone moved out of the country, or maybe a person passed away and they have a pet monkey. So we have inherited a lot of animals here. So we have about 30 monkeys, and we have pocket monkeys, squirrel monkeys, capuchin monkeys. We have lemurs. And then we also have a lot of farm animals too, like chickens and peacocks and goats and pheasants and ducks and geese, baby kangaroos, baby alpacas, baby sheep, a lot of that kind of stuff. And so maybe I can kind of show you, if it's okay to share my screen and show it. What do you think?
Yeah, absolutely.
All right, let me
Mustafa
see if I
will
can find that.
let you share
We
your
have a
screen,
we have
so
a
do
minute.
it. Go ahead.
All right.
It's always fascinating. I was knowing like last year Christmas you were posting this picture. Oh, we have a new baby kangaroo, and he had like this little baby kangaroo like just hopping around like with his diapers. It was like really really amazing, right?
Yep.
Okay, let's go.
Hold on one second.
You got it there.
Yeah, one second. Let me pull up the website. There it is. There we go. Okay. So I'll share my screen. I can go ahead and pull up the share screen here. There we go. Optimize for video. Click share. And there we have it. Okay, so Exotic Animal Parties takes the animals that are on my property and does events to educate students, for example, at schools and summer camps, things like that. And so when people want to get a quote from us, they would either pick petting zoo, exotic petting zoo, jungle friends, strictly reptiles, or full set of everything. So this is where kids learn about mini pigs, giant turkeys, baby alpacas, pocket monkeys, tortoises, giant snakes. So here's an example of an 8-foot boa constrictor right here. It's got almost 8 kids holding it at a school. And this is at a wedding. So we do weddings with our alpacas, things like that. We've got giant rabbits that are huge right here, like this one, peacocks of all kinds. And this is not all of our animals, but this is just an example of some of the animals on our compound right here. So again, it's not open to the public, but I let my good friends come and visit and take them for a tour. So here's a squirrel monkey here, baby goats, giant turkeys. That's my son right there holding his pet turkey named Tom Tom. We've got a yellow iguana, alpacas like these right here. So that's kind of our really enjoyment of our life is that's my wife and my younger son. He's now 6 years old, so this was 4 years ago. But anyway, it just gives you an idea of what we enjoy. Hopefully that helps.
I love that. Michael, let's switch gears a little bit here.
Sure.
Tell us a little bit. You're in the land investing space too, and this is how we got connected. We're together in a mastermind, and tell us a little bit about the business model you're doing because it's really unique. And maybe let's bring the listener here in the picture what you do and how you do it.
Yeah, absolutely. So over the years, I started to practice buying lots almost 30 years ago, and I kept trying every little thing. Like I would try buying lots on lakes. I would try buying lots on golf courses. Then I would also compare that by buying lots that were not on the lake and not on the golf course. I would buy lots that are in regular common subdivisions, like in Florida, where there was no lakes or golf courses or amenities. And then I would also practice buying lots in only resort communities, but not on the lake and not on the golf course. So after testing all of these year after year, I came up with some very strict criteria that I would like to share with you. And I'll go ahead and share my screen again and share that with you so you can see what my criteria is. Let's go ahead and do that. Click share. And here we go. These are some of the houses that I'll be building on some of my own lots. For those of you that are interested in what I like to do is to build houses. This is a modular home built in a factory that I'll be putting up in my lots that are in the resorts. So when you talk about a resort lot, here's the specific criteria that I follow. This is very important for me because this has kept me from ever losing any money. So if I buy lots at around 10 or 15 grand, I keep myself out of trouble. In other words, I don't ever have to worry about a lot dropping in value because no one's going to rush to sell a $10,000 lot during a bad downturn in the real estate market. I only invest in resort communities. I never invest in outside of a resort community because when I go to sell a lot in a resort, there are millions more buyers that would love to buy the lot just to use the amenities and have fun. I only buy lots that are not on the lake or not on the golf course. Here's an example. Which lot is easier to sell? A lot that you buy at 10 grand that's not on the lake, or a lot that you buy for 100 grand that's on the lake? Now, I know that all of us on this call would love to own a lake lot, but if we're talking about investing, when you go to sell a lot, which one would sell faster? If I buy a lot at 100 and I want to double my money, I got to sell it at 200,000. If I buy a lot at 10 and I want to sell it at 20, I only need to sell it at 20,000. Which lot sells faster, a $20,000 lot or a $200,000 lot? So obviously the $200,000 lot would take longer. But when it's a lot for 20,000, there's a million more buyers at that price range. So I stick with lots that I buy for between 10 and 20 grand that are not on the lake and not on the golf course. So instead of buying one lot on the lake for 100 grand, I buy 10 lots that are not on the lake for 10 grand each, which is the same dollar amount. So it's easier for me to sell slices of pizza rather than the whole pizza. And what makes more money, selling a whole pizza or the slices of a pizza? The slices make a lot more money. So I only buy quarter acre buildable lots that are wooded. I never buy a lot with grass because I don't want to pay money to mow the lawn or fines from the city for not mowing the lawn. So I only buy 1/4 acre wooded lots, and they have to be buildable. They have to be in areas with many, many amenities like lakes, golf courses, pickleball, tennis courts, swimming pools, hiking trails, stuff like that. Hopefully that gives you an idea of my narrow focus. And the subdivision must be less than 10% built out. So for example, if the subdivision is 90% finished, those lots might be 100 grand each. So I don't go in there. If the subdivision is too soon, meaning it has no sewer and water, no paved roads, no churches, no utilities, no internet, no Walgreens, no CVS pharmacy, no Walmart, it's way too soon. So my niche is not too soon and not too late and follows all of this parameters and less than 10% built out. And by coming up with this exact narrow criteria, not only have I kept my risk down, where I have never lost any money on lots, but my lots appreciate about 20% a year. So if I hold them for 5 years, I double my money. If I hold them for 10 years, I triple my money. And in my case, I don't need to sell a lot too soon because I'm wealthy. So I take my lots that I own and I keep them for my children. And that means that I hold those lots when I pass away, 20 or 30 or 40 years from now, hopefully. Those lots will go to my children and they'll inherit those lots, which will be way more valuable and much better than giving them stocks and mutual funds. So most of my investors are using their IRA at Schwab or Fidelity and rolling it over, or they're using their old 401k plan, or they're using their current 401k plan where they borrow money from, and they use that money and sell off stocks and mutual funds, and instead they use the money in vacant lots around 10 grand each. And that helps them to lower the risk and helps them to increase the return. Hopefully that answers some of the questions about the process.
What I think is really fascinating about that, what you're talking about, right, is that you started like exploring different markets and then really going really small buy box criteria, right? It's probably one of the
Correct.
most narrowest I've ever seen. I think you're working one community at a time that has like
Correct.
thousands and tens of thousands of lots, right? And I know that you
Correct.
did a pivot because you were like in one community that was not producing anymore. You found the next one. So they're out there, right? And I think what's really unique is because you now don't start sending direct mail there, right? Like because you have narrowed down your market, what you do is you find the buyer first. Bring us a little bit in
Correct.
that picture, like how that works.
Yeah, so it's something I learned early on was instead of buying a piece of real estate and then looking for the buyer, I do the opposite. I find the buyer first. So the buyer is basically putting their trust in me to do the work for them. Let's say they're busy, they're a teacher, they're a doctor, they're a dentist. They don't have time to do all the things that Robin and I do to, let's call it evaluate a lot or underwrite a lot. So underwriting a lot takes a lot of work. You have to really know your shit. You have to know how to search for topography to make sure it's not too steep. You got to make sure that you're checking for liens. You got to make sure you're having someone go there and walk the property and take pictures. You're going to need the photos. So you need someone to physically get out of the car and walk the lot from front to back, take photos of front, down the road to the left, down the road to the right, and then also show where it's at on the map in the subdivision and Google Earth Maps. So all of that is done by my team. So when a buyer comes to me and says, Michael, I've got an IRA at Schwab and I would like to roll it over to a self-directed Roth IRA tax-free and use the 100 grand in vacant lots. They go on a waiting list. At that point, my team starts the process to find their lots. So rather than me hold the lots myself for someone else in the future, instead, I don't sell the lots. I sell the concept of me being their liaison and me being their eyes and ears so they don't have to do that. Otherwise, you got to get on a plane, fly there, check the lot out yourself and walk the property, take the pictures, check for liens, and it's time consuming. So for me, if I'm making thousands and thousands of offers a month, I can make room for me without it hurting you. In other words, I can make room for my profit and to pay my team without you having to worry because you don't have to do any of it yourself. It doesn't cost you any of your own time or energy or money. And our job is to hand pick and pick the best lots in the subdivision. And so once we get those, we guarantee they're buildable, and we transfer those into your IRA or your LLC or your name or whatever you asked us to do.
And I think, that's like really, this is what I love about your strategy so much. You don't go out there and run blind marketing, right? Like you
Right.
think buyer first. And this is like a key strategy where a lot of people don't think about. Just like really when you're going out there, who would buy this? Right. And internally, when we underwrite here, any kind of deals coming in, this is the first question. Like Holly, she's here on the call. Hey, Holly. It's the first question we ask ourselves, who would buy that lot? Right? Like,
Right.
how does the buyer look like? And what would this buyer see in hiccups to not buying the lot, if that makes sense, right? And you eliminate that, and you eliminate a second thing. You don't need funding for your lots, right? Because you let your buyer pay you first, find the lots, and then transfer ownership, right? Like this
So
is
the
so you
funds come in.
mitigate all the rest.
Yep. So the funds come in from the buyer. They're in the account. And then as soon as I find the lots for them, I close on them and I pay for them. And then it's a double closing, a simultaneous transaction. It can be either done the same day or the day after. It makes no difference.
I love that. That's really, really cool. Just a little bit, you know, because also like what you sell to the buyer is special too, right? You don't
Mm-hmm.
say like you buy here like the traditional real estate, you buy for 10 and sell for 20. No, what you sell them is an appreciation game, right? How they use this as an investment vehicle that works through the specific sourcing you do with in the subdivisions you do. Does that make did I get that right?
Correct. We're buying the lots because the appreciation is so good inside of a resort that it's worth it to buy and hold them. So, for example, if you buy a lot at 10 and next year it went up 20%, that's 12,000. Is that possible? Absolutely. A lot can go from 10 to 12 in 1 year. But if you sell a lot at 12,000, you've only made 2 grand. Big deal. But what if you hold that lot for 10 years or 20 years or 30 years like I do, and you sell it at 80 grand or 100 grand or 120 grand? Or if you don't need to sell them, you give them to your kids. Instead of giving your kids mutual funds and stocks and a portfolio when you pass away, why not give them 10 lots or 50 lots or 100 lots that have gone up about 20% a year? So in the last 25 years, my lots have appreciated about 20% a year. And it doesn't mean that every year they go up like that, because there's some years where COVID, they didn't go up at all. But after COVID, the lots that I bought in one subdivision in Arkansas went from 7,900 to 25,000 now. So that's in the last 3.5 years. They've gone up almost triple in one resort community. And yes, there's lakes, golf courses, amenities, tennis courts, you name it, everything's in there. So I only buy in resorts for that reason, because think about it. When someone's going to buy a resort lot from you or me, they don't have to build a house. So they're not buying it to build a house. They're buying it for investment purposes, or build a house later, or to use the amenities, or for investment, or all three. Either investment, use the amenities, or to build a house, or all three. That's a bigger buyer's pool than having a boring lot in a boring subdivision where the only reason why they would buy it is probably to build a house. So by having it only in resorts, the demand for my lots when I go to sell mine later, or you sell yours later, is so much greater because of the fact that someone could buy it and go there and go on, rent a houseboat for the weekend and go diving with their family off the houseboat, or jet skiing, or water skiing, or golfing. So what a difference, such a big difference in demand. So it takes me 6 months or less to sell a lot in a resort, where it takes me 6 months to 2 years to sell a lot outside of a resort if you're selling it at full retail, I'm talking about.
And that I think that's the key factor in that. Like what you really do is you source the market in a way that you know they will go up, right? Because there's a great HOA. Like everyone is bitching about HOAs all the time, but there's also benefit to it, right?
There
Like
is.
there's
Yep.
also a benefit to having access to the amenities. Like there's HOAs that have really everything: tennis courts and pools and lakes and golf courses. And I've seen some with their own airfields. Like you can fly in there, right? There's one here in Texas that has its own like pilot
Sure does.
retirement community because they can just fly in there, right?
Yep.
So
Well, here's another
it's
thing.
all that.
Another thing to interject too, Robin, is that we call it a POA fee for land. So that's Property Owners Association, where HOAs for homeowners. So POA fees are important. I only invest in subdivisions that have a POA fee. Here's why. The POA fee keeps the streets clean. It keeps snow removal. It keeps the sewer and water updated. It keeps the lakes and golf courses updated. Otherwise, the subdivision falls apart. So I want to protect my investment. So I pay $42 a month per lot. It's only $500 a year to be able to maintain my share of the subdivision for the amenities and everything else. So we don't want dead animals on the road. We don't want snow not getting removed. So that's why we pay our POA fee on time every month. Each lot, $42 a month. And I only go into areas with low taxes. The taxes on the lots that I buy and hold are only $79 a year. That's it. You can't find that in most locations. Like in Florida, it's not $79 a year. But in Arkansas or other areas like Arkansas, Texas, and things like that, we can find very low taxes, which means by carrying those lots, you're not wasting money on carrying costs.
I love that. That's pretty good. So when you start something like this, right? Like probably there's some people you say like, "Wow, I want to do that." What Michael does, like, what would you say are the most common hiccups where you're going through, right? Especially like that, like, how would you start something like this here?
Well, every time that you start making offers into a subdivision, and it's at the beginning, you have lots of choices. But as you stay in that subdivision, as years go by, all the good lots you bought up yourself, if you're doing large volume like I am, or if there's other people also investing in there doing large volume, pretty soon, a couple years later, now you're having trouble finding good buildable lots because the rest of them are either way too steep or they have some kind of a big lien on there from a divorce or some other problem where there's a big lien and you don't want to take on a situation like that. So in my case, when I do a lien search, if the lien is cheap, like $500 or something like that, then I don't mind paying it off. If there's no lien, it's even better. But in case there is a lien, I always eliminate any property with where the liens are too large.
Okay. Yeah, that makes sense. Um, How do you see the real estate market right now? Like, I mean, you're all around. You do a bunch of other stuff too. Like, what are you
Mhm.
seeing like in the real estate market right now, and especially in the land market right now when you look left and right?
The good thing is that the land market is not affected by the housing market. So I could care less what housing's doing. I don't watch any of that because it's unnecessary. So if house prices have come down, lot prices at 10 grand have not come down. They stay the same. So in other words, I don't have to worry about lot prices dropping in half or dropping 10 or 20 or 30% like the housing market. I could care less about interest rates. I could care less about oil, Iraq, whatever. None of that makes a difference. People right now have stocks and mutual funds in their portfolios. They would rather sell those and be in vacant lots that are safer and have a better upside than being stuck in stocks and mutual funds. So to me, it's almost like not recession proof or market proof, but it's a niche that really isn't affected too much by having problems with house drops or interest rates or anything like that at all. So I don't care if interest rates go up, go down, it makes no difference to me. I don't care if houses slow down, it makes no difference because people still have money to go into vacant lots instead of stocks and mutual funds any day, every day.
Yeah, that's I see it the same. And you know what I like about land is there's always like whatever the economy does, there's always a niche that works because people fall back into things, right? Like in your model, you just sit it out, right? Because the market comes back. And this is what history shows us, right? Like no matter if you do stocks or real estate or whatever, the market always comes back at a certain point of time, right? Like we've seen that multiple times when you look at it like on a 100-year time frame and not like on a 3 months time frame, right? But the second thing is also like when you run a classical land investing operations, there's always like this niches that work. Does that make sense? Like
Yeah, of
a
course.
long time I worked just single family residential lots. This is where how everyone made money. But then, when 2024 happened with the rates that went up, then suddenly we had just like other lots types going up. And yeah, I like that. I like that very, very much. That you can do that, but just always also be aware, right? Like in what cycle are we in? What's working right now? What's not working, right? And the more the
Yeah.
normal real estate market is crashing, right, the more you need to move away from it, an alternative strategy like Michael does, or like we do in the autopilot with like bigger recreational stuff. So
Yep.
I really very much like that. Michael, is this a beginner strategy that you're doing?
Well, a beginner could do it, but most beginners, since they don't know as much as I do, it would be a little harder. But I certainly can teach someone. So I do have a coaching program if they need it. But other than that, that's not what I'm here for today. Mainly, what's that? Okay. So mainly for me, I can help people on this call with finding vacant lots that they want, or if they want to be taught this, I can help them with that as well.
Tell us a little bit about more about this side of the business. How do you teach people how to do this, what you're doing?
Yeah, basically I would coach them and walk them through it, either one by one or a couple people at a time if they want. And we end up going through the whole process of how to make offers, what to offer, and where to find the lots, how to determine whether they're buildable or not, how to determine whether they have sewer and water, what the taxes are per year. And there's everything that goes into the process of finding good quality buildable lots. Oh, I see a couple of comments too from Frank and Holly. Let me address those two real quick. Frank, you're right. There has been a lot of builders that have abandoned their homes. But again, I don't buy in Southwest Florida for that reason, because most everything was overly inflated, as you know, from just hype. That's different. That's why I stay away from Florida. And builders will get stuck with a house if they can't finish it in time, or if it doesn't sell fast enough. But owning a piece of land at 10 grand, the risk is too low. Buying a piece of land at 20 or 30 in Southwest Florida could be a risk. Absolutely. And then I know that Holly had said that she had a couple of big dips. I'm not sure what you paid for your land, but if you overpay, then you get the dip. But if you underpay, when the market comes down, it comes down to your break even. So if I buy a lot at 10 grand that's worth 12 or 15, it's not going to drop to 5 or 2 unless it is in Florida. Make sense? Yeah. So you've been in a couple of market dips. Yeah. So the market dips are brutal on the houses, but on cheap vacant lots that are, let's say 10 grand or 12 or 15, I've never lost one single penny by buying in resort communities cheap below 20 grand. If I bought 30 grand or 50 grand, now I have more downside, a problem. So could I share my screen real quick, Robin, and show them a typical wooded lot of what it looks like and explain?
Let's do it. Let's do it. Show us a little bit around on what you're doing. All right, so this is a typical lot. Can everyone see my screen okay? Yeah. Yep. So my team, my staff gathers all of this information for my new buyers. So this shows obviously lot, block, unit number, parcel ID, the size of the lot, 0.32, how far from the lake, 4 miles, how far from the country club, how far from another tourist destination location, how far from hiking trails, biking trails, how far from Walmart's headquarters, for example, how far from Branson, which is another tourist destination. This is what this lot looks like. Simple, wooded, no grass, so I save money on grass cutting fees. I'll never buy a grass lot again that I'm going to hold. If I'm going to flip it, it makes no difference. If I'm going to hold it in my IRA or in my LLC for years to come, then I don't want any grass to cut. So you see the photo of the front, photo of the left side, see the home here, a home here, and so on. Photo on the right side, all paved roads, utilities, sewer, water, electric, everything's in. This is what it looks like on a Google Earth map right here. And you can see there's a house down the road here, and then a few others right nearby. Here's another view right here. There's a house across the street. And here's where it's at in this map. So this is the whole map of the subdivision. And here's where that lot is right here. So I buy lots anywhere else in here. 10 grand, 10 grand, 10 grand, 10 grand, doesn't matter. No matter where they're at, as long as they meet all of my criteria. Here's another example, 0.31, 4.2 miles to the lake, et cetera, et cetera. There's the lot, no grass cutting. On the right, on the left, Google Earth, there it is there. So look at this lot. There's a house across the street, 1, 2, 3 houses here, a house here, a house over here, one right over here, one here, and so on. So you can see it's less than 10% built out. Once all these lots are sold and built on, it forces these prices up significantly higher. And that's where the lot is on this one.
hopefully that helps. That's just an example of a couple of lots. Any questions on that stuff? Anybody have any questions for me?
Let me get a little kudos before we get into a little Q&A here, right? So, what you really do here is you enable yourself to pre-sell all lots that you do, so you're never at risk, right? This is the first thing. The
They're
second thing
always
is
pre-sold. Yes. Yep.
you do it in a really much a niche market, right? And the fourth thing is you really enable your buyers to allocate capital to this here too, right? Like, so this is like one of the parts you do so well is you acquire your customers, and the first thing you do is a financial analysis of this. You wanna walk us a little bit through that, what you do there?
So as far as the analysis of the client or the lots?
Of the client first.
Yeah. So whenever I get a buyer, potential buyer, we would qualify them just like you would if you were a stockbroker or a financial planner. You need to know everything about that client. So, for example, you need to know, are they close to retirement? Are they looking for passive income, or are they looking for growth? Are they looking to improve their safety? So when you take someone out of the stock market and out of mutual funds into raw land, you've just increased their safety. You want to evaluate if they're looking for passive income, what percentage return are they trying to make? Are they trying to make 10%, 12%, 14%? Once you gather all that information up on a lead sheet, then you can then recommend as a doctor of land what to do. So basically, you're telling them what to do. You're not saying, hey, would you like to buy my land? You're saying, Mr. or Mrs. Investor, you have stocks, you have mutual funds. They're volatile, they're dangerous, they can go down, they don't make very good returns. You can't get rich off of 6 or 8% or even 10% in mutual funds and stocks. You cannot make enough money to retire typically on that kind of poor return with the high risk. So as you gather all the data, then you can go ahead and recommend them what to do. You can suggest, well, if you're looking for passive income, then you would suggest that they buy lots and turn around and put them for sale on terms. So when I offer lots for sale for my own portfolio for cash flow, here's what I do. I put up an advertisement that says quarter acre buildable vacant lot for sale in fast growing resort community with lakes, golf courses, swimming pool, pickleball, tennis courts, good churches, good restaurants, blah, 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 blah. And this is the kicker. This is my $1 million secret that I'm going to share with you. The rest of the advertisement in bold capital letters says, 0 down payment, 100% financing, no credit check, everyone approved. That advertisement, after practicing the wrong way for years, made me a multimillionaire. Because the lots that I bought, like for example in Texas, that I bought for 10 grand in a subdivision, I sold them at 20 grand. 5 years later, I doubled my money. I made 100% return in 5 years. And then I sold those lots on terms at 11% interest for another 7 more years. And I collected $300 a month times 240 people every single month. And I did that in a self-directed Roth IRA, which means that every single penny that came in was tax-free. So every month, if I had 100 grand come in for the month, I could take that money and buy more vacant lots. So you go from 100 lots to 200 to 300 to 400, et cetera, from the passive income. Hopefully that makes sense.
And that's what it is, right? This is how you really build wealth with a really conservative asset, and you just like did that on scale, and that's a strategy. I think what we can learn from this here is, guys, is you need to really be clear what's your business model. And like Michael planned it out on the details. And, like he's really like, hey, we do it in a really specific market. We find the buyers first. We help them to allocate their funds. When they have the funds, we're going to search the right lots for them, give it to them, because we know through a sourcing this lots will go up in value. When I buy it for myself, I'm going to sell it on terms and like make the money off the interest. So he has like 2 different exit strategies on that. And I think this is what everyone needs to do. Like, no matter if you're like new in this or if you're there, you need to have an exact clearance about the business model you're in. Because when you go in a room, I was on a conference on a land conference last year. There were 100 land investors in that room, And there were 100 ways of doing the business. But what everyone had was like a really good business plan of how do I run this business for themselves and absolute clarity. So Michael, I think that was really really beautiful. So when you want to learn how to do that, reach out to Michael. We're going to put in his contact information down here and his website. So get in touch with him. If you have people that would be interested, or you might be interested in investing some of those lots with this 20% appreciation game, contact Michael. He knows how to do that. And if you're like interested also like in, hey, where's my retirement account standing or whatever, talk with Michael. He will show you how to get the money out there and to put some money in the appreciation game. And he has several other business strategies. He helps you to leverage also business credit and all that. He's really sophisticated in that. Reach out to him. I think that was awesome. And what I'm going to do, Michael, before I leave some last words here for you, I'm going to open it up for Q&A. So, guys, fire away. Like, what questions do you guys got for Michael? And when you want to unmute yourself, raise your hand real quick. Musaf
I
will.
see some in the chat, Robin. I see some in the chat. Also,
Let's
ladies
go.
and gentlemen, I put my email. I put my website, michaelpoggi.com, and my phone number in the chat at the bottom. But I want to address a couple questions here. It looks like Paul asked a question. It says, Paul says, how do you know the demand in the future will be available for such a niche market in certain areas? So first I want to ask you, Paul, how do we know that the mutual funds you pick or your stockbroker picks would be valuable later, 10, 20 years from now? How do we know what stocks that we picked would be up later or down later? We don't. So I don't know what pieces of land will be valuable later. All I know is that right now, people would rather buy a piece of land in a resort with lakes and golf courses than any other subdivision that I've ever been in. So I'm placing a bet. The bet that I'm placing is that people will want to buy land later because land is getting more scarce. Just like now we pay for a bottle of water, sometimes $6 for a bottle of water in some places, like in Disney. My point is that land will probably always go up. They're not making any more of it. It's going to get more and more and more. Hopefully that answers your question. Then Frank has a question. Frank says, are you looking at 55 plus communities? No, not at all. I go in communities that would have younger people moving in as well, because then that stimulates the area with people shopping and doing things. So definitely it does not have to be a 55 plus community. There could be people retired in there, but that doesn't matter. If there is, there is. If there's not, there's not. But before I find a subdivision that I like, I have to hire a research company to find me a subdivision that meets all of my criteria. And if it doesn't meet all of my criteria, then I don't buy in there. For example, if the lots are already above 20 grand, then that's out. If the lots are not a quarter acre, they're too small, then that's out. If there are high taxes in that neighborhood, then it's out. If there's no lakes or no golf courses, or either one of those are not there, then no, we don't go in there. So my criteria is so specific, so narrow, that it's made me the most money by being in the right place with the right lot at the right time. Otherwise, I've bought lots that were not in the right place, not at the right time. And I learned my lessons from that, where I couldn't sell them, or I couldn't move them. Nobody wanted them. So I learned my lesson the hard way. Anybody else have questions? Feel free to go ahead and ask them. Raise your hand.
Let's do it, guys. Don't be shy.
How many of you on this call currently have an IRA, like, for example, at Schwab or Fidelity, or a 401k plan that is not self-directed? Like, how many of you on this call, just say, yes, I do, on this call, have either an IRA or a 401k plan that is not at a self-directed IRA company, meaning it's at Schwab or Fidelity or Bank of America, or it's an old 401k plan or a current 401k plan? Alyssa, great. So there's one more important thing, that for those of you that have a 401k plan, if you have an old 401k plan, you can roll that over. Perfect, Elisa. You can roll it over. And once it's self-directed, you're off to the races. It's like I do. I use my self-directed IRA for almost everything. Now, if you have a current 401k plan where you currently work, you can borrow your own money to yourself. So if one of your family members or someone you know has money in stocks and mutual funds, you can explain to them to liquidate the stocks or mutual funds in that 401k plan where they work and borrow half of what they have in there up to 50,000. So if they have 100,000 in their current 401k plan, they can borrow 50. If they have 50, they can borrow 25. Hopefully that helps. So it looks like Paul converted his over to a self-directed IRA. Congratulations. That's awesome, Paul. You're on your way to becoming super wealthy by using a real estate IRA instead of a Schwab IRA. Big difference. Nice job. Okay, Lisa says, any recommendations on the best self-directed IRA company? Well, we use Horizon, but you can use anybody. We've got probably 3,000 clients at Equity Trust and probably a few hundred at Horizon because Horizon's fairly new and they're cheaper, less expensive, and the service has been better. So it's up to you, but Equity Trust is the biggest, but they also have lots of employees and you get a different person every time and sometimes different information. So I stick with the smaller company like Horizon, which are reasonable, and the prices are also reasonable as well to hold those. So
okay, so that was a private money masterclass right there on the spot, right? So if you're trying to raise funds for your deals, right, this is what you want to do, right? Like this is what you can do. So maybe that's something you want to talk with Michael about because you can get in business with him around that too, right? Like this is the beauty of it, right? Michael, sorry, I didn't want to interrupt you.
No, it's okay. So Paul says, can you borrow tax-free? Well, your 401k plan is tax-free, right? So if you're borrowing from your 401k plan, then you're going to go ahead and use that money to purchase a property, but it's going to go into an LLC where you're going to have to pay taxes on it, right? But when you pay yourself back into the 401k plan is probably tax-free, so that's where you get the tax-free advantage. But borrowing the money out to use it for real estate rather than waiting until you retire from the company or, God forbid, get fired, you're better off taking out as much as you can out of your current 401k plan and getting it out of stocks and mutual funds immediately and use it in an LLC and buy land or something, some kind of real estate asset. Now, I like Advanta. They're a smaller company also, Frank, so it's no problem. No complaints. It's just another example. So yeah, so Advanta is okay also. There's quite a few out there. So half the total amount that you have in your 401k plan, not what you have in your IRA, Paul. So if you have a 401k plan where you work and it's worth 50 grand, you can borrow 25 legally and take it home. And remember, you're borrowing your own money. You're not borrowing somebody else's money. It's just your own money, so it's no harm. And you would be paying yourself back monthly back into the 401k plan every single month on time. It would be a very small amount, but you're paying yourself back, nobody else.
I love that.
Anybody else with questions, thoughts, or ideas?
Stands now. It's coming here.
So many of you probably know people that have a current 401k plan. You should be tapping into that for investor funds to use with you. That's one example. Or if you know someone with a self-directed IRA or someone with an IRA at Schwab or Fidelity, all you got to do is ask them, hey, if I have a good real estate investment that is fairly safe and has a good upside return, would you be interested in taking a look at it with me using your IRA? The answer is always yes. So that'd be a great way for you to, find private capital for all of you on this call. Matt says, what is the default rate on zero down owner financing? I'm going to give you two different answers. The typical default rate is about 1%, but let me give you my answer. I don't care, Matt, because I hold the deed. So Matt, if someone buys a piece of land from me for 20 grand that I bought at 10 grand 5 years ago, and they buy it at 20 grand and they're making payments to me of 200 a month or 300 a month or 500 a month, and they stop making payments, what happens? I have the deed. I have no risk at all. I keep the money they paid me, and I'm able to go ahead and resell it. You got it, Matt. You nailed it. So really, it's just sending a letter to the person who defaulted. Now, that's happened to me a couple times in my life where one of my good friends that bought 6 lots was making payments to me, and he lost his job. So he asked for 6 months of no payments, and I gave it to him. Another person was an older woman. She was 80 years old. And when I asked her, are you sure you want to do this? You're 80 years old. Why would you want to buy and hold lots? And she laughed and she says, Mike, because I have 10 grandchildren and I want to give one lot to each of my grandchildren when I die. Well, she passed away 2 years later after making payments for 2 years, and her two sons, which were 45 and 50 years old, called me up, and they got caught up on the missed payments, and then they then became current again, and all of those 10 lots were given from her to her grandchildren, all 10 of them. Anybody have any questions? Great idea. What is the structure of the sale? It's called contract for deed. And that means that they're going to make you monthly payments. Once the final payment is made, the deed is transferred. It's no different than a car loan. When you buy a car from the dealership and you put 10 grand down and you owe the dealership 30 grand, that's not your car. When you make the last payment on the car, you get the title to the car. Same thing applies. So at the end of the term of the loan, 5 years, 7 years, 10 years, you transfer the deed upon them making the final payment. Meanwhile, who pays the annual taxes? Who pays the monthly POA fees? The buyer does. It's added into the payment. So if the payment's $300 a month, you add on $50 a month for the taxes and POA fees. You're at $350 a month. Then you pay the taxes and POA fees on time while they're paying you so you don't get stuck. Thank you, Alyssa. So you guys have my phone number and my website there. If you feel like you want to learn more about me, please use it. It's michaelpoggi.com. And then also my phone number is in there, which is in the chat. If you can't find it, you can get it from Robin.
I love it. Michael, thank you so much for hanging out with us. So if you guys don't have any further questions, I just like going to send everybody out of here. I think it was an awesome session. There was so much to learn about how you raise money, how you can source strategies that really work for you. And it's a really interesting strategy also because it's like he plays the long game, right? He's not out here for quick cash. He's just like out here to really build consistent stuff with his people. And I like that very much. So I hope you saw some value in that. And guys, we have for the months of April, like 3 more slots for the Land Autopilot. So if you want one of those, just reach out to me, schedule a call with me. And other than that, guys, I wish everyone a great Thursday. I hope you have some sun like we have here in Texas, and see everyone from the community on our comms call at 3 p.m. with Holly. And if you don't know what that is, just like maybe we can drop the link down here for the school thing, Musaf. And yeah, let's go and rock and roll. Come to the comms call if you have some deals that you want to work on. And with that said, Michael, thank you so much for chiming in, spending some time with us.
Absolutely.
And guys, we'll see you next week.
Thank you, guys. Thank you, Robin. I appreciate you having me on here. I'm honored to be on your call here. I appreciate you.
Thank you so much. Bye-bye, guys.
Thank you.